Welcome back to Bitcoin Treasuries. I'm here with Chase and Mason from Acropolis. How are you guys today? Thanks for joining us.
Doing great.
Great. Happy to be here, Tim.
Could we start with you, Mason, and then go over to Chase? If you guys could just start with a little bit of your backgrounds and how you made your way to both Bitcoin and Acropolis.
Absolutely. I'll start with my Bitcoin story. I got into Bitcoin when I was a teenager. In high school, and I really wasn't confident in my, what I had learned online about Bitcoin because, Warren Buffett, Jamie Dimon, all the financial titans of the world said that I had no idea what I was talking about. So I went and got a degree in finance, really just to test that hypothesis, and got the degree. At the end of it, I had some different experiences in real estate, equity research, and then traditional corporate finance at Dell, and then decided that I ultimately wanted to do something a little bit closer to Bitcoin, or maybe have an ability to influence a company in regards to Bitcoin. So I joined eBay. They had a rotational leadership program that I did there. And then once I finished that up, I ended up on the Treasury team. So funny enough, now we are here starting Acropolis, working on Bitcoin Treasuries. So that's the short version.
So my background is more of the thoroughbred entrepreneur type background. So both of my parents were serial entrepreneurs, and I grew up helping them kind of run and operate those businesses, everything from production management to import-export to a family restaurant that we've owned for 19 plus years as well. And so I also went and got my degree in entrepreneurship and small business management, and started a B2B SaaS company out of college with some buddies. And we ran that for about 9 years until I came on to help run Acropolis. And I got into Bitcoin in 2016. And for me, the meme that really caught my attention was just the 21 million. I've understood from my finance background, economics background as part of my business major and expertise working with my parents' businesses and my own, that scarcity really does drive value. And so for me, I came into the Bitcoin rabbit hole through the 21 million and just went down to basically discover or try to test the assumption that this hard cap could be defended over the long term. And once I was convinced that we would never see more than 21 million Bitcoin, and that this protocol would, essentially never go down because the incentives are in place to ensure that, I became a big believer and started taking, whatever wealth I had as a young guy out of college, but also convincing my parents and friends and family to go really hard into Bitcoin, kind of started lump summing in around the 9 to 12K range. And then in 2018, we adopted a Bitcoin Treasury for that family restaurant. So starting in 2018, we started sweeping cash flows into our own Bitcoin Treasury. And as you can imagine, that's done really well. And so I reached out to Michael Tanguma, the CEO, co-founder of Onramp Bitcoin, the multi-institution custody solution. And he's one of the kind of founding members of Acropolis. And they were looking for somebody to run the business and kind of take it from 0 to 1. And I guess he liked my background and kind of some of the ideas that I was bringing to the table, and met Mason, and we hit it off right away. And we've been at it ever since.
I can't help to notice, Chase, you have a block clock of a sort in the background. Can you tell us what we're seeing on there? I think I see a $100,000 Bitcoin price, which is pretty exciting.
Yeah, I think that happened in the last 2 minutes. So we just passed 100K again.
We should get it. We should get together more often. But go ahead.
We should. We should. And it flashes to MSTR too. And I know because we've had many conversations about this. But I'm a big MicroStrategy bull, which obviously makes sense for us at Acropolis as folks who are out there being proponents of a Bitcoin Treasury strategy, for us to cheer on MicroStrategy, which is the best in the game at adopting that Bitcoin Treasury and going all in.
So Chase and Mason, correct me if I'm wrong. Chase, you're the CEO at Acropolis, co-founder. Mason, you're co-founder and head of strategy at Acropolis, and also a part of Early Riders. Can you guys break that down as far as Early Riders, Onramp, and Acropolis, and how all that works together?
Yeah, I'd be happy to take that one. So Early Riders is, to our knowledge, the first Bitcoin denominated venture fund. There's a lot of venture funds that focus solely on Bitcoin, but what makes us different is we raise, deploy, and return capital to LPs in Bitcoin as a unit of account. So every single decision we make in terms of an investment or deciding to hire someone, it's measured against holding spot Bitcoin as the alternative. And at Early Riders, there are two forms of investment in our firm. The first one is more traditional venture, where we give an entrepreneur Bitcoin and we give them high-level guidance and advisors, and they run with it. And then the second form of investment is what we call a build. So it's something where we're much more hands-on, and we're utilizing our network of founders, operators, advisors to really lead the operation of that business. So Acropolis is an example of that. And I'm a principal at Early Riders, while at the same time, sort of like Chase alluded to, getting this shop off the ground.
Got it. Anything to add there, Chase, or that wraps it up?
That pretty much wraps it up. I mean, Mason kind of splits his time, but he works way more than the average Joe. So for me, it feels like I have a full-time co-founder.
Oh, that's awesome. Mason, what are the limitations, in your view, to traditional treasury assets during these times of higher inflation or any inflation?
Well, the obvious answer is having the inability to outperform inflation. And we're talking stated inflation came out today at 2.9%. I think when it peaked, it was somewhere around 10. But at Acropolis, we recognize that the actual inflation rate is much higher than that, something closer to double, triple. We like to look at the rate of M2 money supply, so the rate of money actually being put into circulation. And if you're measuring your business's treasury against that, then it's likely lackluster. And even if you compare the S&P 500, for example, over the last 100 years or so, if you adjust that for M2, it's mostly flat, or even, I believe, negative. So the biggest issue is just actually outperforming the real rate of inflation and maintaining purchasing power, storing shareholder capital. But then outside of times where inflation is high, and just altogether is the counterparty risk in my eyes. A lot of people look at treasuries as, the risk-free rate in big air quotes in my eyes, because it says it's backed by full faith and credit of the U.S. government, but the U.S. government at the same time has racked up, this $37 trillion tab, and doesn't seem to have any ability to get its fiscal house in order. So I personally would not consider that a risk-free rate. And then if we're talking about other forms of fixed income securities, there's just the counterparty risk in terms of who's the issuer, what's actually backing this, I think is too big and something that is often understated when compared to Bitcoin. And I'm sure we'll get into it, but we see Bitcoin as less risky.
Hey guys, this episode is brought to you by Onramp. Bitcoin custody is evolving. Both self-custody and single third-party custody come with significant risks and trade-offs. Onramp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your setup. Onramp secures your Bitcoin in a segregated, cold storage, multisig vault, guarded by 3 independent, institutional-grade custodians, none of which have unilateral control. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. To learn more, schedule a consultation with the Onramp team. Go to www.onrampbitcoin.com. Chase, what makes Bitcoin a better, more modern treasury asset?
Yeah, a lot of things. just to kind of maybe touch on what Mason said there, we did a report recently, one of our big research pieces that our CIO Glenn Cameron put out called The Inflation Illusion, where it basically dispels the idea that CPI is the real inflation metric. And we proved through the data of that M2 money supply growth that over the last 10 years, the last decade, M2 money supply has grown at 12.8%. So to Mason's point, if your business and your treasury reserves or your revenues, if you're not at least keeping pace with 12.8%, you're losing purchasing power over time. And we obviously know that Bitcoin is one of the few assets that has consistently outperformed M2 money supply growth because it's the best performing asset of all time. So why is Bitcoin a better modern treasury asset? Well, one, it's essentially, as Jack Mallers likes to say, growth off the shelf. Whether you have $100 to spare or $100 million to spare, you can buy Bitcoin and hold it for a cycle, and you're going to outperform every other asset. But there's also these other really interesting aspects of Bitcoin that we like to get into when we talk to our clients. So obviously, the 24/7 liquidity aspect of Bitcoin is very useful from a treasury standpoint, because you can tap those reserves in any amount instantly as needed, even disregarding bank holidays and, times when it's maybe even hard just to get a wire out of your traditional bank account. So we actually believe that Bitcoin is more liquid than even cash in many respects for a business. And then there's also this aspect that, Sam Callahan, who's one of our research advisors, did a report with Lynn Alden about basically Bitcoin being the barometer for global liquidity. And so if you believe, as we do, that we are living through an inflationary era where these governments are going to have to print money to pay down the interest on debt, kind of alluding to the 37 trillion in debt that just the US government holds on its balance sheet. Well, Bitcoin outperforms every other asset and is the most pure play when it comes to that rising liquidity. And so it makes sense for that reason. But one other cool thing that I like to talk to clients about, and this maybe we'll get into this later, which is kind of the idea of why would I want to own spot Bitcoin as opposed to just buying the Bitcoin ETF? We firmly believe that because of Bitcoin's nature as this digital bearer asset with 24/7 liquidity, that it represents this idea of pristine collateral. And that over time, individuals and companies that have spot Bitcoin, they're going to have the lowest cost of capital, meaning they're going to be able to put down that Bitcoin as collateral and have the lowest borrowing rates in the world, because a lot of the interest rate that is determining your borrowing rate is based on the risk that that lender will not be able to recoup the funds if you neglect to make payments. And so by posting Bitcoin as collateral, we believe businesses in the future are going to have businesses that hold spot Bitcoin in the future are going to have the best borrowing rates, and that's going to be a huge advantage in the days to come.
Mason, what do you think the barriers have been up to this point that are really prohibiting or keeping companies from adding Bitcoin to their balance sheet? Has it been education? Has it been all the FUD, psychological, legal, regulatory, custody? I don't know. I think we could go on for a while, but over to you.
Yeah, the reality is it's a combination of all of those things: volatility, regulatory uncertainty, accounting challenges, convincing the board and all of the executives that this is something important and accretive, and even risk around or concerns around cybersecurity, around the actual like you said, custody and security of the Bitcoin accounts or Bitcoin wallets. I think, I had this experience when I was on the treasury team at eBay. I did everything I could. I mean, I was the Bitcoin guy for years, advocating for sellers to be paid in Bitcoin, for buyers to be able to pay in Bitcoin, for Bitcoin on the balance sheet. And one of the first questions I always got was the volatility aspect of it. The volatility aspect of Bitcoin is very scary to traditional finance folks. And even though I think us Bitcoiners understand that there's more upward volatility than there is downward volatility, and that the vol is a feature and not a bug, but this is not widely recognized in traditional corporate finance whatsoever. And then talking on the regulatory aspect of it, it's the the FASB making it so that you can finally, just now this year, this month, you can account for Bitcoin on the balance sheet and actually mark it up instead of only being able to mark it down. So there's, and then I think it sort of goes along the lines of the saying that you can lead a horse to water, but you can't teach him how to drink. Once a company has a reason to need Bitcoin, whether that's their margins compressing or needing faster payments, needing like whatever their issue is, that's usually what leads a company to Bitcoin, not someone convincing them that it's something that they need. So yeah, Tim, to answer your question, it's a combination of all of them, but luckily a lot of these walls are being broken down one by one. I mean, it seems like every other week there's a big piece of Bitcoin news that makes it even easier for businesses to put it on the Treasury.
You mentioned your experience at eBay on the Treasury team. Can you walk us through the rest of that story as far as was volatility the one and only concern, challenge, or objection, or how did that go?
Definitely volatility, definitely education. I mean, I would try to bring it up in every capacity I could, and anytime there was a Bitcoin or an air quote crypto project, it was tossed over to me. But ultimately, it's almost as if, and back then Bitcoin was anywhere between the teens to the 50s. So I think that psychological barrier of 100K, where we start to think, okay, how high does Bitcoin go instead of when is it going to zero? And I think something that we also refer to a lot is, I mean, I don't want to call, I wouldn't say that they are, in particularly eBay, the yuppie elite, but that article from co-founder of Onramp, Jesse Myers, he put out an article called "Why the Yuppie Elite Dismiss Bitcoin," and I highly recommend that. I think it applies to most company treasury teams because what's worked for them over the last 40 years is what's worked for them, and Bitcoin had no part in that equation.
Mm-hmm.
And for me to say, hey, there's this now brand new, ultimately scarce digital bear asset, there's a lot of words there that don't seem like they should be going together, and it does seem too good to be true when I'm saying, hey guys, we could do Bitcoin for this and Bitcoin for that, and it would be great for the company, and look at MicroStrategy, and look at their balance sheet. It honestly sounds too good to be true. But I think now we're getting to the point after the ETFs being approved, like I said, FASB changing the accounting rules, we've got SOB 121 hopefully soon being repealed. Once these barriers just continue to be brought down and down and down, then I think it's much less of a pipe dream. And okay, what are we doing? What is our strategy for Bitcoin? Because this thing is clearly not dying. It's clearly not going away.
So let's say that a company gets some, we'll call it fundamental understanding of Bitcoin. They appreciate it. At that point, how do you address with them why multi-institution custody is so important when they're now about to unlock that corporate treasury adoption, so to speak?
Multi-institution custody, in my eyes, and I can't believe I didn't mention it before, is the only way for companies to put Bitcoin on the balance sheet in a meaningful way. Because if we sort of, like, let's break down the different ways that they could get exposure to Bitcoin. Let's say they do an ETF, right? Well, we know that 85% of the ETFs are all custodied with the same company. So that's a huge honeypot risk. We don't want to take that. We don't want to get Mt. Gox or FTX, right? And then you might think, all right, how do we get some Bitcoin in self-custody for the company? The idea of having a single-sig wallet is obviously a really bad idea. And you start thinking of a multisig wallet. So you have multiple plastic devices, multiple seed phrases to look over, and the technical burden, the security risk of having executives or members of the treasury team managing these plastic devices. It's funny. I actually walked into the CFO of eBay's office one time with a ledger, and when I was teaching him about Bitcoin, and he goes, "You put money on that thing?" And it was sort of like this joke. And I think now with multi-institution custody, where you get the benefits of a third-party custodian like an exchange, but also the benefits of real Bitcoin UTXOs on chain in a multisig, except you're not needed to store those seed phrases or manage those hardware devices. I think that is really how we unlock the corporate involvement within Bitcoin in a safe way. Because look, all these tech companies, all these companies in general, they have compliance teams. They see this and they see the risk, quicker than the average Joe might. So I think multi-institution custody solves for that. So that's why we're exclusively partnered with Onramp, which I know you're very familiar with, but we can talk more on that if you'd like.
Yeah. Do you want to touch on Onramp for a second, Mason? Because was just going to ask Chase what Acropolis's core mission is and what services Acropolis provides to clients. So maybe that would be a nice kind of building block, if you will.
Yeah, I think, Chase, go ahead, and then we'll touch on MIC after.
Yeah, because it'll tie in there. So at its core, Acropolis's mission is to simplify and scale corporate Bitcoin Treasury adoption. And so what we're doing is, by providing this global Bitcoin Treasury solution, we've created this repeatable, scalable process to onboard companies, business entities of any type, any size. And we're essentially serving as their outsourced Bitcoin Treasury team. Now, there's a couple advantages to this. If you just like Bitcoin itself is a scarce asset, there actually is a scarcity of Bitcoin experts and folks with backgrounds in corporate finance and Bitcoin that could help a company safely, securely adopt a Bitcoin treasury. And so if every company in the world was to try and go out and essentially solve for this themselves and bring on this expensive in-house expertise themselves, then we're not really going to get that runaway exponential growth on the corporate treasury side of things that obviously Acropolis is pushing for. And so one of the unlocks, of course, is us onboarding all of our clients into this multi-institution custody solution that Mason mentioned, where it's a 2 of 3 multi-sig, where a company doesn't have to worry about the CEO or the CFO holding private keys in their desk or being a target, or what happens with continuity planning. If we have to let the CFO go, do we have to respectfully ask for him or her to turn the keys back in? So this is obviously a big hiccup that has prevented corporates from adopting the Bitcoin treasury. But then at Acropolis, what we do is we move them through these different kind of internal teams within our business. So we'll onboard them into their multi-institution custody vault. We'll talk through an investment and accumulation strategy that makes sense for their business based on their previous year's financials. We can work with them on things like employee rewards. So one of the cool other research pieces we've put out is this restricted Bitcoin units. So it's this idea of companies rewarding and retaining and attracting employees without using restricted stock options that dilute the business and are not liquid for their employees, but instead using restricted Bitcoin units, basically vesting sats at their employees on these same vesting schedules. So we can set that up for them right out of the vault. We have a corporate communications team. So a big part of this is obviously bringing your investors, your employees, your stakeholders, your customers on board with the strategy. So we have white label research that allows any company to really get stakeholder engagement there. And then a really cool and growing part of our business is the accretive finance team. So that's when we'll take some time to work with that client and look at debt or equity financing options to accrete more Bitcoin per share and go out and make more Bitcoin purchases in the near term, kind of pulling forward future revenue. And then last but not least, we would move them through our tax and accounting team, where we would kind of work through with their bookkeeper, their CFO, their monthly reporting schedules, these kind of specialized tax and accounting treatments. But all of that really is built on this layer, this custody layer of multi-institution custody. And if it wasn't for that breakthrough that Onramp Bitcoin provides as our sister company, we really would not be able to provide these other financial services on top of it.
Mason, does Acropolis serve clients nationally, globally, in private markets and public markets? Can you speak to that?
We are mostly focused on the US, but we do serve globally. We're speaking to a few firms in Asia and Europe right now, because that's the benefit of Bitcoin, right? Bitcoin is a global asset. It's not controlled or exclusive to any country. And then on the public versus private market thing, we're also serving both. So it's, it doesn't matter if you're the largest publicly traded company in the world or you're quite a small shop. There's the ability to create a Bitcoin allocation that is right for that company. And we at Acropolis firmly believe that no matter how big or small, private or public, US or outside of the US, there is an opportunity for us to help you put Bitcoin on your balance sheet.
Chase, you mentioned your family's restaurant and that your family's restaurant adopted a Bitcoin Treasury strategy back in 2018. What was that like, getting that set up, especially 7 years ago, 6 years ago?
Yeah, so I would say it first started with kind of 2 years of trying to orange pill my father, who's kind of my main partner in that business. And it is a sole proprietorship technically under his name, but it's a family business, family run for 19 plus years. And so it took like a 2 years of solid education with my father to get him on board with this, for him to see the returns from personal investments before he would consider touching it with the business's capital. One thing that's really interesting about a restaurant is, based on reservations, you could actually scale back your workforce tomorrow. So if I find that we have a really busy reservation booking for tomorrow, we can scale up our workforce for tomorrow, and so you can literally do that on a day-by-day basis. So a restaurant is in a unique position where it has somewhat predictable operational needs that are very flexible. And so in our case, we'd been kind of just sitting on cash reserves for, the call it 16 first years of the business. And we understood that, sitting in cash in a checking account was not doing us any favors, even if it made us sleep a little bit better at night, or in my dad's case, made him sleep better at night. And so what we ended up doing is we ended up having to use just a multisig kind of plastic device solution, because something like what Acropolis is offering wasn't available at the time, but we also understood the value in kind of multisig custody solution. And so I think that really only worked because we were a sole proprietorship, where it's essentially my dad and I managing those keys. If you're a restaurant and you have 5 co-owners that help start the business all at 20% ownership, I think already you're kind of too big for that type of arrangement, because now, which of those co-owners is going to have access to the keys? What's the protocol going to look like there? And so it worked for us because we were kind of just small enough to pull off multi-sig. But we also understood that, the other restaurants and business owners that we talked to in our lives, they were in no position to do something like that.
Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. Mason, why would a company look to hire Acropolis as, call it, their outsourced Bitcoin Treasury team, rather than try to hire for the expertise in-house, or go at it in some other way, whether it's finding someone out in the market, contracting somebody?
Number one, I say it would be really difficult to find the proper expertise. We are in this Bitcoin echo chamber, so we think that everyone understands Bitcoin they're Bitcoin only. There's a lot of nuances to it. And anyone who has studied Bitcoin deeply never really feels like an expert because there's always more to learn. I mean, I feel like I didn't know about the difficulty adjustment, for example, until a couple of years into my Bitcoin journey. It was, so far down the rabbit hole. So I think companies will be very hard pressed to find the proper talent, especially as this becomes more of a trend where every company is doing it because they realize that it's accretive to shareholder value. So that would be the number one issue. But then number two, just being the cost efficiency of it. Does it make sense to hire a Bitcoin strategy officer for your firm? I'm not sure. Does it make sense to hire a Bitcoin specific treasury team? I'm not sure. But what you can do is, take that and put it on us, because we are the experts. Our team has decades and decades of Bitcoin only expertise, and we can do it at a relatively low cost. So I think, if I ran my own business that wasn't helping businesses adopt Bitcoin treasuries, I would certainly use Acropolis.
Yeah, and maybe if I can just tap on that again, one of the things that you'll find if you are a business and you try to go out and raise from the ground your own Bitcoin treasury team, it could be years before you're able to move through your compliance needs to actually make your first Bitcoin allocation. And so one of the rationales for, tapping Acropolis for this is that you can allocate at today's prices rather than next year's prices when you finally have all of the box checked to actually move forward with your first lump sum purchase. So yeah, I think getting your speed to allocation is also something that companies need to consider.
Chase, you almost touched on this earlier, but does Acropolis offer its clients services to help them run the MicroStrategy playbook, meaning when it comes to raising capital to buy more Bitcoin, whether that's debt, equity, raising capital?
Yeah, absolutely. I mean, this is something that all three of us on this call I know are very fascinated with, watching MicroStrategy adopt their Bitcoin treasury, which started out with just a pure buying Bitcoin for the balance sheet and then has obviously morphed into all sorts of accretive debt, equity, convertible bond issuances and strategies to accrete more Bitcoin per share. So we absolutely help support our clients in this area. It's one of the areas where we think we can provide the most value, because if somebody comes to us and they're already kind of bought in on buying Bitcoin and they already are bought in on the idea that multi-institution custody is the best, yeah, we can help you with your accumulation strategy. We can help with the corporate communications and tax and accounting treatment. But this is really an area where Acropolis's network of investors and private wealth and other folks that we are networked with in the space when it comes to capital markets, this is an area where we can really go and help you create that next accretive equity or debt funding round.
I guess just the other side of the coin, why wouldn't a company be better off just buying the Bitcoin ETF product? You touched on it maybe a little bit earlier, but if you want to dive deeper on that, and just what's the advantage of holding spot Bitcoin?
So the kind of obvious answer is counterparty risk. If, like Mason mentioned, all of the ETF capital right now is pretty much sitting at Coinbase. And so if you understand that that is a real risk, and you've been in this space long enough, you know that that is a real risk, then there's no reason for your firm to take that risk. But what I would say is this is really more of what's coming down the road. Like when SAB 121 gets repealed and all these traditional banks and institutions can start custodying Bitcoin, the asset, spot Bitcoin, and start to create kind of the borrowing and lending services on top of that, we really do believe that folks who can put up spot Bitcoin as collateral will have the best borrowing rates in the world. And so if you as a business have acquired a healthy Bitcoin treasury and you can post that as collateral, imagine if you're a startup and you raise a $4 million seed round, you take 2 million of it and you put it in your Bitcoin treasury. That Bitcoin treasury grows over the 4-year period when you don't need to touch it yet for operations. And then you go to start clipping it for operations, and it's already twice as big because it's gone through a full cycle. And now, instead of going out and raising an additional dilutive round of capital, you could actually just post that Bitcoin or some amount of that Bitcoin as collateral and borrow the liquidity that you need to fund operations. So this is a really interesting solution for businesses of all sizes to basically stop diluting the ownership of their business and making sure that they have really good interest rates when it comes, or if it comes time to borrow and raise more capital.
And yeah, just to add one more piece to that is when you're buying Bitcoin through Acropolis, you're getting real Bitcoin UTXOs that are on chain that you can go and verify, whether it be, through mempool.space or whatever block explorer you'd like. When you're buying Bitcoin ETF or Bitcoin through an exchange, this is not something that you can ever go and verify. I think maybe some of the ETFs have put their on-chain address online, but it's all in one big pool, and you can't identify the Bitcoin that specifically belongs to you. And with Acropolis, you can identify the Bitcoin that specifically belongs to you.
Mason, why is Acropolis Bitcoin only? Why don't you recommend that businesses diversify and add all sorts of cryptos to their treasuries?
Because Bitcoin is the real innovation in this space. Bitcoin, unlocked something that no one was ever able to figure out before, which was ultimately scarce digital capital. And every other form of crypto is really a startup. You're relying on a centralized team to execute on a mission that can be changed. And Bitcoin is something that can technically be changed if the entire network comes to a consensus, but it's slow and steady for a reason. And if you're a business looking to store shareholder value, shareholder capital, you want to store that in something like Bitcoin, something that is slow and steady and is really purpose built to store capital. So the idea that any of these other cryptos or Ethereum likes to throw around the idea of them being air quote, what do they say?
Ultrasound.
I don't even remember what they say. Ultrasound money, it's just silly. It's really just silly. So we operate in Bitcoin only, and we get a lot of benefit from focusing on that as well. We're not constantly, what's the new token? What's the new AI meme? It's Bitcoin only. That's all we do.
Chase, if the Trump administration adopts a strategic Bitcoin reserve, which is essentially a Bitcoin treasury at the nation state level, how will that drive corporate adoption in your view?
Yeah, I mean, I can't see how it could help but help alert all of the corporations and other nation states of the world that the game theory is on. I think many of us in the Bitcoin space understood the path that Bitcoin would take from kind of retail adoptions to corporate adoption to nation state level adoption. I mean, if you follow the incentives, this game has really been baked since the original white paper. And so I think the United States, putting its flag in the Bitcoin, on the Bitcoin hill, if you will, and saying, hey, this is an asset that has value. It's of strategic importance, not only to us as a nation state, but I imagine that if the Trump administration adopts a Bitcoin treasury policy for the nation state, that there's going to be a lot of other pro-Bitcoin business policies within the United States. And so I really think that this is kind of maybe that final spark that was needed for us to see the sovereign Bitcoin game theory race play out. And that is just going to create more FOMO for the corporations if they're seeing what is essentially the mother company, right? So if Google is a big business in the United States and their parent company is the United States, and the parent company is acquiring Bitcoin, and it's a truly scarce asset, so the more that the United States acquires, the less that Google will be able to acquire, that just further creates kind of the panic, the FOMO, the incentive to go out and make sure that you're adding Bitcoin to your treasury today and not in the future, because those governments have the ability to print money to acquire that asset, whereas businesses don't. And so businesses, if they're smart, they really need to front run the nation states.
Both of you, it seems Acropolis is very well positioned for the rising adoption in Bitcoin Treasuries. What are each of you looking forward to the most in 2025?
I'm really looking forward to seeing the businesses that we helped begin to buy Bitcoin, see the results of that. So Acropolis was initially launched in the summer of 2024. So the price was, 50, 60K range bound. And we've seen some appreciation, but really to see, sort of that work pay off and see customers come back to us and go, wow, our balance sheet is doubled or it's tripled or it's quadrupled. And now we have the ability to go and acquire this business that we always thought would be strategic. Or, we're not worried about making payroll next month because if something happens, we have our Bitcoin Treasury if we really, really need it. So I think there's a lot to look forward to in 2025 in terms of Bitcoin, all the obvious strategic reserve and all of that. But for me, it's just going to be the gratification of seeing the companies we help.
Yeah, I think Mason is spot on the Acropolis front. And maybe one other thing there is because of inflation, a lot of our clients feel they need to raise prices to keep up with those rising costs to the underlying business and whatever rising costs exist in their supply chain. But when you have a Bitcoin treasury that is growing rapidly, a lot of those businesses are not going to have to raise prices, and they're actually going to be able to capture more market share and satisfy their customers even more because they're the entity that is not rising their prices on them. And so I'm excited to see how that plays out, whether that's in 2025 or beyond. And then outside of Acropolis, I'm really looking forward to MicroStrategy's Q1 earnings report. So we talked about it here, kind of the FASB rule changes that allow for the appreciation in your Bitcoin holdings to be treated as net income. The biggest beneficiary of that in the world is going to be MicroStrategy. And I really do believe that in the Q1 earnings report, when we finally see those numbers with the FASB rule changes, we're going to see the greatest ever change in earnings per share. And I think that is really going to be the wake-up call to the rest of the S&P 500, the rest of corporate America and beyond, that, hey, a Bitcoin treasury makes a ton of sense. And you can, spin your wheels like NVIDIA does, investing in CapEx and doing all of the heavy lifting that they do to try to outgrow their share price when it comes to outperforming MicroStrategy. Or you can do what MicroStrategy does, and with a team of 5 to 10 people on the treasury, just buy and hold Bitcoin over a couple cycles. And it seems very clear to me that buying and holding Bitcoin is the new growth engine in corporate finance.
Chase, Mason, appreciate your time today. I'll throw it over to each of you for any closing thoughts and where people can find you and Acropolis online.
I'll go first, Mason. I'm just at Chase Palmieri on Twitter. And I'll just call it out. If you go to acropolistreasury.com, you can see all of our research reports and everything that is kind of cutting edge when it comes to Bitcoin treasuries. And you can book a free consultation that Mason, I, or our CIO, Glenn Cameron, will be the actual person that you talk to. And that's a free consultation where we'll just take some time to learn about your business, what you'd like to get out of a Bitcoin treasury and if it makes sense for you. And we'll be happy to meet you and talk through that.
Thanks for having us on, Tim. Yeah, go to acropolistreasury.com/book. We're looking forward to working with you. I'm Mason Carter on LinkedIn. On Twitter, I'm at OnChain Cowboy. It used to be anonymous, but I left it. So you can find me there. My DMs are open if you have any questions or need any help.
Awesome. Thank you both very much.
Thanks, Tim.
Thanks.